Hey everyone, and welcome back to Option Alpha and this video tutorial for double tops, the elusive chart pattern that everyone is looking for all the time. So let's get right into it here as always. So let's go over the chart pattern itself. The chart pattern, a double top, is actually a bearish reversal pattern, obviously because of the name top. And it's very easy to spot because it has two peaks, which which is where it gets its name for the double portion of the top. It is a roughly equal peak that you want to start seeing on the charts. So you see an uptrend that is before the chart pattern happens, an uptrend that leads into the first top. This is where you actually don't really know if the chart pattern is going to be a double top. You have to wait for that second top to go in. So you have an uptrend that comes up and meets some resistance and then falls back to some support level. After some buyers come in at that point, then the market rallies but doesn't quite get past that first top. Now you start to look at the chart pattern a little bit differently. Again, as I said in the beginning, this is really an elusive pattern because everyone is looking for it, so they always seem to never see it. But it's really important that that second top is virtually even with the first top. Again, you can be a little bit higher, a little bit lower, but virtually even with the first top, showing that it's running into the same area of resistance or the same area of sellers. After that second top has been put in place, then the market again starts to decline and sell off. And the most important part, the absolutely most important part here, is that it actually breaks the prior support level. And without that break, we could just continue into a more bullish upward pattern. It just could be a simple consolidation pattern sideways, a flag pattern, or a pennant pattern. So without that break of support, you really run the risk of being in the middle of a chart pattern that could continue to move massively higher as you're shorting the stock. So we really want to see that breakout and that trend reversal before we do anything. So as always, let's crunch some numbers here on Option Alpha. The average rise decline, so the average decline for this particular double top pattern is about 19% historically. Again, that's a really good rate for short patterns. You're not going to get these 68 to 80% declines on these things, but 19% is pretty good. The breakout failure rate is only about 8%. So again, you can see how important it is that we actually make sure that that support level is broken. And if you do that, then you're actually going to be right about 92% of the time in the direction of the trade. Now the throwback and pullback rate is fairly high at 61%. And basically what this means is that after the breakout, the market's going to move lower past that support level, and then it's going to come back up and retest that support level later on. So this is really where you want to get into the stock. If you miss the breakout and the ensuing fall after that, then you want to wait for the market to come and rally right back up and retest that area as new resistance. And it's going to do that about 61% of the time. So don't get discouraged if you actually miss the initial breakout and market fall, because it's more than likely going to come back and give you a second opportunity. So some key points to remember. These are easy patterns to get confused. Again, like I said, they happen at the end of an uptrend. And so without that breakout of support, you can actually be in the middle of a pattern that can continue to be bullish. So we have to have that support. That support must be broken. The lows are sometimes rounded or draw out a bit, which can be a sign of tepid demand on the second peak. So after the first peak has been put in place, if you actually see that the subsequent low where the support level is being established is really hard to narrow down. Like it doesn't come down and hit that level and then run away from it real fast, but it comes down and it stays at that area and then it kind of rallies up higher. Then you know that people are already starting to lose some confidence in the stock. And number three, the subsequent decline from the second peak should see increasing volume. And this is really a big key point. You don't really want to see increasing volume on the low in between the peaks. And that would suggest that people are actually coming into the stock at lower prices. And so they're really confident in higher bullish moves. But you actually want to see a increasing volume as the stock declines, meaning that people are hitting the exit button and rushing for the exits. Hey, thanks for watching this video from Option Alpha. As always, we invite you guys to come back and check us out at optionalpha.com. And if you like this video, please share the video with any of your friends, family, or colleagues on your favorite social network.